Somehow there are two of me on there.
I think we're going live, so everyone should be coming in. I see attendees starting to come in as well. Hi, and welcome to CannaTech's webinar. We're back speaking with our guests from our very first webinar that we did at the beginning of the COVID crisis. I'd like to welcome David Hess from Tress Capital, Will Muecke from Artemis Growth Partners, Codie Sanchez from Entourage Effect Capital, and new to our webinars, Matt Norgdren from the Arcadian Fund. Thanks everyone for joining us. How is everyone? Let's start with you, Dave. You're in New York, right?
New York, and adjusting to another new reality of ours, as most of those participating are likely aware. You know, we woke up to a terrible tragedy about a week ago now. A middle-aged African-American man by the name of George Floyd was murdered on camera by 4 police officers, and the world is reacting, Saul. The world's reacting, and the world's upset.
Will, you're in the UK. How is it over there?
So we're still in full lockdown, but with the news, as David was saying, and the events, London is not undisturbed. There were protests in the streets yesterday in London. Social distancing went by the wayside in lieu of anger and outrage over the inequalities that are still perpetrated in the US. And the backlash seems to be worldwide. So London is no different than anywhere else, save for the fact that demonstrations here were mostly peaceful and nothing like the destruction that we've seen in some of the cities across the US.
Codie, you're in the center of it, California. All you peaceful people of California, riot at any chance you get.
Yeah, you know, it's something I think, you know, I had to certainly sit with a lot this weekend, and I sort of made myself watch every video I could from, you know, the initial murder to the protest peacefully to what we now see as looting and rioting. And it's hard to watch. And I think it's especially, you know, hard to watch as all of those on this video are small business owner advocates and have small business owners as the reason why we get up in the morning and do what we do every day. And so we've seen looting and rioting across the cannabis industry and across, you know, our portfolio, and I think most people's portfolio of companies. And so I think there's a real balance to be had between making sure that we can have some sort of constructive change come out of this, and making sure that we can continue to have our country seem together and not completely eviscerate the small businesses that have already been devastated by COVID-19.
Yeah, I agree. It's definitely the most challenging time I've ever been through as a small business owner. So, and I've been through plenty. Matt, where are you joining us from?
Hey guys, here in Los Angeles as well. Interesting all over the world, but certainly in Los Angeles, a lot's going on, but you know, we'll try to do our part today to make some sense of it. I know a lot of our family and friends in the industry have been hit. Seems to be one of the targets, cannabis shops. I mean, 15 or 20 at least in California that we know of. David's involved in one. I think Will and Codie are as well. So we're all reaching out, trying to help our friends right now, but we'll recover from this, just like we have with the past situations. The industry's full of battle-tested entrepreneurs, and we have full confidence in them, Saul.
Well, that's what we need at this point. So we got together, you know, over 8 weeks ago, and we spoke about the state of the cannabis industry over a time where it was deemed essential from illegal. Now we're going into a new period. How do you think this is going to affect the industry in the short run and the long run? And then from your perspectives as investors in this industry, what does that really mean for you? So Will, why don't you kick it off?
So I think I'll take a big macro step back. I think this puts right back into the forefront the issues of race relations in the US. The history of cannabis is one that is fraught with landmines going all the way back to Dr. Anslinger and what was really domestic colonialism. So social justice is coming to the forefront in a very, very visible way. And I think Kareem Abdul-Jabbar penned a really good op-ed piece in the LA Times talking about the frustration that exists within the US and the lack of addressing those issues. And cannabis, you know, the profits that are being made in cannabis today somehow have to find their way back to those communities where the war on drugs has really eviscerated communities of color, both in the US and actually where we used to live, which is down the isthmus through Mexico down to South America. And the injustice element is front and center and needs to be taken on as a primary issue beyond what we're just talking about from a pure business standpoint. This goes endemic to the overall industry and really puts a spotlight on things that need to change.
David, you were mentioning as well some of the challenges with both COVID and the riots with the industry. You had one of your dispensaries hit in LA. This obviously affects both the short term and long term. What does this look like in 6 weeks' time?
So, I mean, the situation, to be quite honest, is fluid. We're still cleaning up the glass, and there's a lot of it, right? So we're going to be spending the day reviewing our insurance policy. It's certainly going to be tricky, given the fact that we are still in a federally illegal, dealing with a federally illegal substance. But we are hopeful that that insurance will be supportive, but we just don't know, right? Whether insurance company should support the claim is very, very different than will they support the claim, right? And they're most insurance companies are still so backed up from COVID related claims. We're just going to have to wait and see how this plays out. I was preparing for a very different conference today, right? Very, very different webinar. We only reopened the store about a week prior to this, right? We were doing curbside pickup. We were so excited. We were standing up e-commerce, and quite literally, all the inventory was just taken from us. So, silver lining, there are plenty of people out there now that hopefully will kind of calm down now that they got some cannabis in their system. But I don't know, right? We're just gonna have to see.
Codie, how is the outlook for cannabis?
Well, I'd always try to use history as my guide. And if we look at history as a guide, I don't think the industry overall will see a considerable setback from this from a long-term perspective. COVID is definitely much more of a trigger on the market, and so is legalization and 280E and a myriad of other items. In the short term, I think there are only so many hits a business can take. So on an individualized basis, I imagine some companies don't come through this. And this is sort of the straw that broke the camel's back. But, the flip side, I think, to that is that, if we look to history, what we see after protests such as these are urban flights, specifically from, minority dominated areas. And I'm, a Latino and have certainly seen that in areas I've lived before. I lived in Washington, D.C., and areas that didn't come back to sort of their current state and still haven't for decades. And so, I think one of the parts that's really hard to speak about today and nobody wants to is what is the economic impact that this is going to have, and how do we make sure that it's not actually sort of this reverse perverse situation where those who are least or most disenfranchised are actually the ones that continue to suffer for these actions for decades to come. Because if history is our guide, from Detroit to DC to LA, that is what happens after periods of massive riots and control, because insurance can't be had on businesses going forward that are in riot prone areas, and because business owners are risk averse, and so they're going to move out of areas in which their property has been decimated. And these are the things that as a society we have a hard time talking about, because it doesn't fit the narrative of, yes, Black lives do matter hugely and we need to make change, and police brutality is unacceptable. And at the same time, we have to realize that violence and looting actually hurts those same communities more than anybody else. How can you hold those two things in your mind when today, I mean, I got all fired up this weekend because on one side, people were saying literal posts that all cops are bad. No matter what, all cops bad. Literal posts on the other side, all protesters are looters. And so I just sat there thinking, how have we lost the ability to have nuance in our mind? And so long answer, but cannabis fine long-term, short-term business issues on an individualized basis, and really sad for communities that I think will suffer from this for decades.
Matt, is this an accelerant to cannabis? It's a question I asked on our last webinar. Was COVID a accelerant to global cannabis? And does this change the situation?
Well, it's a great question, Saul. I think it probably is long-term, but in the short term, you're going to have a lot of people, thinking about other things and policy. You look at the Northeast, New York, those 7 states had a good chance to go this year. In fact, they probably would have. Now, it's a 2020 ballot initiative. There are going to be a lot of initiatives pushed back, but I do believe when they get there and people start, looking at the different policies that are on the table in different states and countries, it will be an accelerant at that time. It just has to be heard. So I think that's the one caveat. In the short term, you probably do see things pushed off. So long term, it's tough not to think about this as a way to, create tax revenue, create jobs, all the great things we know. But if anything, all the COVID situation and this current situation show us is that cannabis is in high demand. A lot of these stores got hit over the last few days, over the last few months. Cannabis has crept into the national spotlight in a different way than it was before in terms of being a legitimate essential business. So all those are really good signs. I think you have to think it does, very similar to the 1933 alcohol prohibition. You've heard a lot of industry leaders talk about that. Very interesting to compare those situations. But yeah, at the end of the day, Saul, I think it brings a lot of attention, not only to the industry, but as Codie, Will, and David put it a second ago, this is an ESG-driven industry. It's an industry that at its core cares about the environment and female empowerment and minority lives. And so many wonderful things that I think a lot of industries, quite frankly, are trying to figure out by reverse engineering themselves. I think the beautiful thing about our industry, in an emerging space, you have an opportunity to build something the right way. So I do think it's an accelerant, not today, but when things start to open up, Saul, and we have those conversations, I think it'll happen then. And the beautiful thing about all of this is I do believe, and I think we all believe, that the plant, the botanical wellness aspect of it is good for the world. And we do think people are going to rally around it more maybe than they ever have before.
Yeah, I agree. We ran into a problem here in Israel where there was 2 companies looking at doing a clinical trial with cannabis on COVID. And we, thank God, ran out of patients. So we thought that was going to be a big accelerant into the industry. It didn't turn out to be. These, deals have been happening, and I'll go to Will because you just had some recent news of a large deal that you did in the United Kingdom. Can you talk a little bit about the funding that is happening right now in cannabis?
So I think that I'll go back to 2019. The end of 2019 was a difficult year for cannabis because the funding cycle that had been private to public to private again had really dried up towards the end of the year. So the private capital markets were relatively thin. I think going into 2020, and maybe even said on the stage at one point in time, I thought that 2020 was going to be a halcyon year for investment to cannabis because valuations had come down proportionate with the lack of capital. Frankly, the stress that had been put on private companies had brought a lot of the terms of deals into investor-friendly territory. So I thought that 2020 was going to be a great year. And then COVID hit. So I think that there were stresses already on the industry from a funding standpoint. I think this have only continued into the COVID environment, especially when you look at, we did a deal here in the UK that's actually a traditional horticulture business that has cannabis licenses. And the expectation of going into that deal was that we would have bank financing from traditional lenders to complete that deal. And I think we put our bid letter in on the 17th of March. It was accepted on the 18th. And a week later, the UK went into lockdown. And so talking to banks and trying to get anybody to commit to a diligence process where you couldn't get to the site to even do on-site diligence, let alone do working papers across legal teams and accounting teams, it looked like a bridge too far. So in the end, our financing for that deal came out of the parent company itself. We ended up carving up some of their capital structure to accept debt on the balance sheet as part of the funding of that transaction. So it's been a tough environment. I think the COVID situations continued that difficult overall environment. That being said, my hope, and I think that we've seen a little bit of this happening even with the tumultuous events of recent, is that the fundamentals of cannabis are still incredibly strong. That the secular trends towards liberalization and legalization, whether you're talking about that on an international scale, or if you look at 2020 and what was expected to be a legalization wave going to wreck in states in the US, or even just some new states coming on as medical, that may be slowed down, but it's still moving forward. So I don't think that I would change my opinion that this is a tremendous time to be getting into cannabis. All the other variables being held equal, the long-term trend is still very positive. And deals are getting done. It's just they're getting done with more difficulty, and sometimes they're just getting delayed.
Codie, any deals in the last 8 weeks and some of the challenges, I guess, of doing deals on Zoom? Will mentioned due diligence. How do you do due diligence over the phone? I know Intel did a $1 billion deal solely on Zoom in the last few weeks. So it is possible, but I think very rare.
Yeah, I mean, well, so we've been mostly focused on additional funding to portfolio companies that we are currently investing in, to add on deals to those portfolio companies, and to structuring M&A activity between them right now. So for the most part, you know, in the last couple of weeks, we did one small deal, but the due diligence for that has already been done sort of pre-COVID. And now, you know, I don't think we do it via Zoom, to be honest. We're out in the markets, going to visit our portfolio companies actively. We're looking at 2 pretty large deals right now that are more on the distressed side. And, you know, you better believe that we're inside of their cultivations and grows, and we're inside of their retail. And I don't think that would change. You certainly, you know, theoretically, I think could do it via Zoom, but given that the world is opening up, I don't see any reason to do that. And I do think in our industry, more than any other, due diligence is so crucial. And the only way that you can really do due diligence on a company is by getting there and speaking to all the employees also that maybe management might not want you to speak with, and might not throw on a Zoom call for you. So, so we've been active on the ground in California in particular, as well as 2 other states where we're looking at deals right now.
Matt, do you want to have a stab at it? Tell us a little bit first about Arcadian, because a lot of the guests don't know about you and your portfolio, and then how you're tackling funding over this period.
Yeah, I could echo Codie's statement a little bit, which is that I think the first few months, you're really trying to focus on your own portfolio, make sure the house is in order. And then as you got your house in order, and that includes both your investor base and your portfolio companies. So depending, I know David, Will, and Codie well, everybody has a little bit different investor base and portfolio, but in general, we all have quite a few companies. Arcadian, we have 35. I think Entourage has about 500 now. I'm not sure how many, but Will and David have quite a few as well. So, you know, all of us were really just figuring that part out, Saul. And then you started to see a transition into okay, I want to do deals. The industry's doing great. As Will said, this is probably better time than ever to get in. Definitely is, actually. So you have to look at new opportunities, but that becomes hard. So you really start saying, I'm gonna try to do as much as I can around things I've already been in diligence with, because you can start traveling a little bit, but if you've already been there and you know the team, many of us have looked at companies for years before we make an investment. So in a lot of ways, that got the attention sort of right after you got your house in order. And that maybe was the last 2, 3, 4 weeks. So I think just now are you starting to say, okay, new things that I haven't been in diligence with, I haven't maybe been to the facility, maybe you can start that process. But I agree with Codie, you're going to really want to be there, because we've all been in the industry long enough to know that you miss a few things from time to time. It's just really hard. I think the last time all the groups here got together, and by the way, for those of you watching, the funds are actually very good friends. And it's a good thing for the industry, because all we care about is resourcing you. We're only as good as you are. Okay, so all of us talk because we want the industry to be properly resourced and grow. But as we do these things, we realize that things like corporate governance are going to have to be strengthened. And I know we're focused on that. Things like forensic accounting, on-site field examinations on a quarterly basis. So these are things that the funds and smart investors who are here till the very end, no matter what, for richer or for poorer, we want to see happen. And so I think it's for the good of the whole industry. But in order to have that type of diligence and these types of things we want to see happen, it's difficult when you can't get on a plane, you can't go put your hands on it and smell it and breathe it and live in it, because that's what we ultimately do with our founders. We live it with you. So we do want to be there. And I think only now do you have the confidence you can get back into doing some of that diligence. Last thing I'll say is, for better or for worse, you start to see investors move in a different direction in the value chain. So you're starting to see deals with a lot more meat on the bone, as they say, or revenue or scale, starting to get a little bit more of the attention than startups. I do believe it's still a great time for startup, as Will said. So we need to pay attention to some of the startups. So we're trying to do our best to balance companies that don't have as much information as others do.
And I just just wanted to echo what the panel's been saying, and just to add that it stresses the importance of doing homework, right, on the industry and on a lot of these companies, even before you're actively doing diligence on a deal, right? So I would say, almost 365 days a year, I am looking into cannabis companies, right, regardless of whether or not they're raising. I want to understand as much as I can about about each sector and about the companies that are leading those sectors, so that when they do have a raise, A, I'll be ready for it. B, I might proactively approach some of these companies and offer support in ways that they might not be thinking about. And then lastly, I think I said this on our panel 8 weeks ago, and it's more important now, that to have an industry partner, someone that really, really understands who the players are in the industry, someone that really understands the sectors, like those on the panel and some others that are active value-add investors in the industry. It couldn't be more crucial of a time to partner up with some of these experts right now, especially if you aren't able to do the diligence yourself on the ground.
That's a great point, David. I'll just say something because there's a down moment here, but we work together quite a lot too. I think the industry is a collaborative industry as much as anyone that any of us have been in, I would say. But if there's something going on in Europe, a lot of the other investors will just call Will. Will, what are you seeing? What do you believe, my friend? Like we're in a bunch of companies together. Codie, have you looked at this deal? David, you're in the Northeast. You're over in Israel quite a bit. So what's really interesting is we can all kind of work together to get the comfort around a particular investment opportunity if you may not be able to get that yourself, because we trust each other. We really do. And if one of the great investor groups is leading a particular deal, that means a lot to the rest of the community. And so maybe we can rely on each other even more. I know we do now, but if you're out there somewhere in the world and you're looking at raising capital and you don't think we can get to you, it's okay if you can get somebody there who really, really knows the industry, like David said. If you can get that group to buy into your deal, and they have respect from the community, that does mean quite a lot. So you don't have to have somebody fly across country necessarily if you can get someone to represent the community of investors.
Well said.
And so, you know, I hope everyone hears me because my internet's a little unstable, but we have a 40,000-foot view, and you're involved in all different sectors, and you're often able to take those and put things together because you know this guy is distressed and this guy is possibly distressed, and you can smash two things together to get a better result. And I think that's very telling of the time right now, where I'm personally struggling. You know, I don't have the revenues that I was expecting in 2020. I don't have an events business. So there are others like me, but having that, you know, ability to take those pieces and move them around on a chessboard is incredibly exciting at this point. Can we talk maybe, Codie, a little bit about M&A opportunities and how to structure? I know lots of people from the feedback emails that we get afterwards, a lot of people are looking for funding for new projects. But this is more focusing on things that exist.
Yeah, I mean, quite honestly, my take here, and I'd love to hear from the group because maybe we'll have some divergent opinions, which could be fun. But I think right now in this world that we're in, unless you have an idea for a startup that is like a YouTube or a Facebook or an Uber, some like sort of game-changing startup, which isn't normally the case in cannabis, I think you are crazy to not instead look at the businesses that exist in cannabis and figure out if you can buy your way into them to get bigger, or if you can combine with others in order to get bigger and get scale. The biggest thing I think, and this is hard to hear, I had an entrepreneur get super mad at me, I think on like Thursday or Friday, because they wanted to have a call. I had a call and they said, listen, we don't have investors. We don't exactly have the exact experience we need in this industry. We don't have a product yet. And we don't have a client fit yet. And I said, well, what are you doing? Like, okay, well, first, actually, I said, do you want my opinion? And then they said yes. And I said, are you sure? And they said yes. And I said, okay, if you want my opinion is, what are you doing? This is going to be super hard. And hey, hard's fun and hard's great. And thank God there are people that do hard impossible things, but hard is different than not well thought out and strategic. And so if I was an entrepreneur sitting in the audience right now, what I would be thinking if I was going to start my brand new startup is instead, which startups already exist that are in this range that probably are in Saul's boat, where they don't have a ton of activity right now? And could I give them some capital? Or could I have my idea to give them another revenue stream? Or could I bring this company that does, I don't know, manufacturing of edibles and this company that does distribution of edibles in a market? And could I help them bring together and create something else? And I think if entrepreneurs are infinitely creative in creating ideas, why don't you become more creative right now in creating more value for the businesses that exist? Because my true belief here is that capital is going to stay scarce for some time in this industry, very scarce. And so if that's the case, then you have much more power when you have revenue and scale than you do with nothing. So I would say, go try to put companies together. This is very early stage. Go try to put companies together, go try to add revenue streams to them. And if you're later stage, this is just that on steroids. Then your deals and options become much more prolific. And maybe somebody disagrees with me, which is totally fine, and you think everybody should go do a startup right now, and I'd love to hear that too.
I'd actually add to that, Codie. The startups that we are in, going into COVID, if you were a brand company and looking at a brand launch, and we also are partnered with a couple of the industry players, so big CPG companies that have their own venture arms. You know, we kind of watched what they were doing in traditional CPG, and no one was launching a new brand. There was not a new hair or skincare product that was coming out of L'Oreal or Unilever. Everything was going into what's sort of a base needed essential product, and how do we sort of back that company? Everybody else put it on hold until people can actually start having foot traffic going into stores again. And so for the companies that we're in, from a startup standpoint, we took the same approach. We said, if you're about to do a brand launch, no, You're going to go into hibernation mode and kind of wait until there's a market that comes back. And frankly, even though when the market comes back, we need to understand what that market is. I mean, we don't know if COVID-19 goes to COVID-20 and if things get sort of flipped on their head again come the fall or the winter. So I think that that's really prudent advice for anybody that's starting, waiting to launch, or companies that are already in startup mode and have sort of mid-launch or midstream launch that they're looking to hibernate and hold on for a little while longer. And then for those companies that already have revenue, if you haven't done it already, you've already cut all of your OpEx to the bone, if not deeper than the bone, to try and get to a level of survivability. If you're still in a place that you can't see the horizon line of that cash burn turning into cash net even or break even or into profitability, you have to be thinking about scale. You have to be thinking about, how do I combine with another company in my similar line of business, same profile, where we can combine the revenue streams and actually get over that hurdle to get to profitability. And so that's where you start looking at M&A out of a hopefully position of strength, where you have two good revenue streams coming together, but you just have to rationalize your operating expenditures to get to a point of profitability. And so I think M&A becomes a tool, not an act of desperation, to both either as a startup port into a growing revenue stream, or if you already have revenues, to optimize those revenues into what hopefully will be profitability.
I guess a lot of our audience is international, and a lot of the conversation here has been US focused. How does that play out if I want to start a grow in South Africa, which is an very often pitch that I get? There is no revenue yet. There's no revenue in early tech companies. There's no revenue here. So are you solely focusing on revenues at this point? Is that one of the killers of deals? You
jump in?
Yeah, sorry.
So, I mean, I think our screens start beyond that. It's kind of what is your business and what are you addressing? Frankly, right now for us, any sort of straight wholesale biomass is just a no-go. We see that as a way to lose a lot of money, because even at $1,000 a pound or whatever you want to price your expectations for isolate, distillate, medical or otherwise, it's a commodity. It's an agricultural commodity that will lose value over time as supply comes online. So we start looking at, okay, if it's not pure biomass, what's the value add? Where are you having protected margins? Where do you have defensible businesses that have defensible market stature? If you're looking at, South African grow, do you have a local domestic economy that you can sell into? Because exporting into Germany was everyone's dream last year. And I'll tell you, we're in a couple of those plays and it still hasn't happened. If you're looking at the UK, if you're looking at the medical side for cannabis, the last month's scripts were in the couple of hundreds, not the hundreds of thousands as you would like to see in a mature or growing market. So I think you really have to take the lens as to where are you in the value chain? What's your near-term revenue opportunity? How much cash does it take to get to a profitable standpoint where this company can stand on its own legs? Because there's no guarantee that there's a second funding round coming up anytime soon. So these long-term bets of, the moonshot, and of course, because it's a great idea, you'll continue to find funding, doesn't exist. So I think I'd really go all the way back to the basics as to what can you do, what's defensible, and who are you selling to? And you come to me with a mousetrap that works, then we start talking. Beyond that, it's a lot of, headline stuff that usually falls apart in diligence, and we step away from pretty quickly.
Codie, so, you were smiling on the commodity side. This is something that you're facing in the US, where the price is getting squeezed. The fundamentals of this business, you said, are very good. But then how do you pick and choose those companies? You've got a dearth of pre-revenue, clinically, focused companies out of Israel. You've got ag tech companies, and then you've got companies actually making money in cannabis. And it seems, from my perspective as someone that's pushing on the startup side and pushing on obviously the pre-revenue side, we're fighting a long uphill battle for the next year until that opens.
Yeah, I mean, here's the thing. Cannabis is a funny industry because for a while, if you put cannabis on anything, you got VC style money. And in effect, a grow in South Africa is not a venture style business because it is an agricultural commodity business. And so you have to look, if you're looking for funding, take cannabis out of it and imagine that you're growing X type of plant. And that X type of plant, look who typically funds those types of businesses. And the answer to that would be, it's not venture capital, and it's not private equity when it's early stage, maybe later. Up front, it's really people's own capital and industry incumbents and debt. And those three areas are how you fund those types of businesses. It should not be through equity market or equity-like returns, such as we're looking for in sort of this VC-PE hybrid where I think a lot of us play. So that's the first item. I would say make sure that you have your financing correct. And some people may be annoyed by the fact that that is not a VC-style business, but in actuality, equity is very expensive. And so you should, if you have a real business that you believe is going to have real revenues and you have the ability to operate it and the expertise to operate it, you're probably better off going debt and putting your own capital and or friends and family capital into that type of business. So that's where I'd start on that front. As far as total startups in general, you just, again, like nothing that we're doing here is truly revolutionary if we think about this. The entire cannabis industry sort of has a satellite mode to all of the other sectors in the US economy, in just about every sector, really. There's part of cannabis, since cannabis is federally legal, there's even banking components of it. And so you just need to go and look at what the margins are in those other industries and where the actual money is made from the business perspective, and you'll be able to see which businesses have moats around them and which ones don't. And that's why now a lot of people are interested in retail, and it's why they're interested in manufacturing and brands, and it's why they're not as interested in the underlying commodity, or in some of the equipment businesses, let's say, or the heavy machinery businesses, because typically those are financed through debt as well. And so, I think people would be very well served by looking outside of the cannabis industry to other sectors that are parallels to yours and seeing how they finance and fundraise. And that's probably the right way to get funding for your business, in my opinion.
Dave, funding challenges. How have the public markets? I mean, we expected a big dip, I guess, now with the riots. I think the dip came more from earning reports than anything at this moment. But, public versus private is always a question that a startup is asking. Am I right to go public? Should I go public? And if I have gone public, how do I maintain that value?
Great question. To tell you the truth, there was actually, just prior to this unrest, about a week or so ago, there was a bit of an uptick in cannabis stocks. So, I know you're watching and saying there's been a downturn, but it's flipped a bit, and it doesn't take a detective to really understand why these companies that are doing well on the market, it's because they've been focused on their profits, right? And they're illustrating to their shareholders that they're a good company to invest in, and it's not just hype. And so the more we see that play out, the more confident we'll be as investors to support those shares.
We're talking about really. I'm hearing there is no funding for. Might be, but don't go to cannabis funders for it. There's no funding to start. If you're operational and you want to scale or grow your business, how does that look for we turn that around?
Matt, you want to take that one? I saw you.
To you, Matt.
Oh, so yeah, you were breaking up a little bit, Saul. I was trying to piece that one together, but I think, just to echo some of these comments here and take what you said a little further, I'm a little bit more optimistic. I think my friends on the call know that probably is the case with me, even in the worst times. But In general, I'm just really optimistic about the industry because, you look at the big board IPOs last year, Saul, thinking more macro here outside the industry even, it was the lowest number I've ever seen in terms of companies that went public that were cash flow businesses, cash flow positive businesses. It was less than 23%. Okay, I've never seen that before. The world is not going to be okay with that going forward. We're all talking about what type of investment opportunities people want. People want investment opportunities that have real things going on, not just eyeballs, but cash flow, assets, demand, and ultimately what kind of growth. And so in the cannabis industry, at least you have all those things. And probably if you put them all together, more than any industry I can think of that's out there. So the general investor base outside of cannabis is going to be looking for those things. Not 75% of companies that go public aren't even cash flow positive. That's going to change. So cannabis, I think, is in a great category to be attractive to world asset allocators. Now, longest bull run in history, Saul. So it's not like investors didn't see something coming. For years now, investors have been saying, let me keep some capital on the sidelines. Something has to happen. Can't go on forever. This is the longest we've ever seen. And so I've been actually seeing a lot of money on the sidelines sort of saying, okay, now that the shell shock has worn off a little bit, where do we put that? And cannabis is an alternative, is as attractive as any industry. So if you're an entrepreneur out there, I totally agree with what my partners on the phone are saying in terms of, I wouldn't want to start a company today, but as the Canadians say, you have to skate where the puck is going, not where it is today. So let's assume in 6 months, 12 months, 18 months from now, cannabis continues to move forward. And there could be some things that happen that worldwide really force this industry into a better spotlight than it even is today. And if that's the case, you can't start your company then. You may want to have started it now, and then 18 months from now, have been able to pivot and work with people and be in a place where you have some scale. So I wouldn't want to start it, but if you look back 6, 12, 18 months from now, I bet you do see some consumer-facing companies that were kind of birthed out of all of this and using this data and changing consumer behavior patterns to build something for the future. So I think funding is coming, Saul. If you look at our industry, if you look at public companies, which is a question you just asked, less than 3% of all cap tables represent a true institutional asset allocator. Depending on how you cut that up, you can look somewhere between 6 and 10% if you count Constellation and some debt and some other things. But if you look at true institutional equity, it's around 3%. So you have an industry that grew 36% last year, that produced $16.5 billion in revenue, grew 2 to 3 times in asset value, and only has access to 3% of the resources to grow. Okay, so even if that doubles to 6%, 10%, 15%, meaning more institutional allocators are attracted to the space for a lot of reasons, that can double and triple and quadruple the resources we have to grow an industry. So it doesn't take a whole lot, Saul. I'm very optimistic. I'm very confident that real capital's going. We haven't had access to any yet. In our minds, you shouldn't be public in an emerging industry. You don't have institutional capital. Now, some people should be. In some markets, that's how you get growth capital. But the reality is, by definition, an emerging industry doesn't have access to institutional capital. And so we think it's coming. And I think you should be encouraged that it is coming. But you got to be prepared for that. You got to be ready to pivot. And I think if you're on this call and in this webinar, you should be as excited as anybody in the world, and that you're in an industry that has growth and that you can do good for the world. We're all asking ourselves that right now. How do we do something? I'm not a doctor. I'm not a politician. I'm also not a law enforcement person. So what can I do for the world? Well, I'm going to continue to fight for this medicine. I'm going to continue to fight for this industry and the entrepreneurs in it, because I know it makes people's lives better. So at the end of the day, the demand, the growth, all the things you want are here. Please be encouraged through tough times and good. This will continue to move forward, and we're going to make sure of it, Saul.
Those are amazing words. Codie, we spoke a little bit about the racial undertones in cannabis and how that's, affecting. I know in California, and I hope you can hear me because my internet's really crappy. But in California, there are some programs that are for minorities. And how do we go about rebalancing? This is now an opportunity for cannabis potentially to go about doing something in the right way. So, what sort of programs exist, and how do people access them, and how does that become a focus for the people funding?
Well, as far as programs that exist, at this stage, most of the programs that exist are social equity. And, what these essentially mean is that, if you are a license holder with a last name like mine, like Sanchez, and you grew up or live in a disenfranchised part of varying cities like Chicago and LA, probably have two of the most robust versions of this, then you have a higher likelihood of getting licenses. What this really isn't is a lot of capital for entrepreneurs of color or minority backgrounds, or a lot of education and training for them, or really a lot of the money going towards minorities that want to come into the community and be trained into how to get employed in the community. And so, this is very much my opinion, and by no means, industry standard, but I think a lot of the social equity programs that we've created are vanity programs, where essentially you can put somebody's name as an owner in varying zip codes, and because that person's name sounds like mine, then it sounds like politicians are doing something to help the industry. I really haven't seen programs that actually help the community overall. I think the best thing that we can do to help the community overall is actually keep increasing the tax base from the cannabis companies that we have. And the way that we do that is if we increase the tax base by making sure we crack down on illicit operations, and by lessening the taxes overall on legal operations in order that they can actually compete with the black market, what we're going to do is we're actually going to see more taxes come into the community, and those need to be given to community efforts like education, training, and employment of minority groups. And if we did that, we would actually see real change. But what sounds sexier than that, because that sounds relatively complex and it sounds like lowering taxes on businesses, which people don't like to do, instead of doing that, we say we've done a good thing because we've given license holders with the last name Sanchez the ability to own their own business, when they've never ran a business before, for the most part, don't have the community to do it, and don't have the money behind them to do it. And so I think, actually, to talk to Matt's point, I actually think that we're going to see some smarter taxation roll out of California this year. And I think we're going to see it across the industry. And I think we're going to see them realize the ability, if they lessen this really burdensome tax that they have on cannabis called 280, and also if they allow more counties to open, like Anaheim right now, it looks like it's going to open. World happiest place, really about to be. And I think, if we do that, then we'll see more minorities come into the mix, and it'll actually help uplift communities, and we put the money back into the communities. But I don't know that we will actually do all of that anywhere near as fast as we should, and love to hear from the rest of the group if there are other ideas.
Will, I guess let's jump to you.
Yeah, I would pick up on one thing that you said that I think is hugely important, Codie, is that the money gets back to those communities. Because a lot of the times cannabis right now is being seen as a budget hole filler, and it goes into, and not that we don't need to replace our infrastructure in the US, but it goes into a bridge somewhere else, rather than back into the community where the most damage has happened over the history of cannabis and the enforcement of the war on drugs. So, I mean, we've talked about, this is at state legislature levels, of creating sort of mini venture funds that are community-based, that you don't have to be a cannabis owner or entrant into the field, but you can get the benefit of the tax revenue that comes off. So you can start a local grocer, and the base capital that comes out of that comes out of a local community fund that was paid for, funded by the revenues that turn into taxation off of the cannabis industry. So there are ways of getting money back into communities where the community doesn't actually have to participate in the cannabis industry itself. And I think that's the critical linkage to actually make sure that the dollars are getting back to the right people, more so than just, again, infrastructure work or other holes in the budget that need to be filled. But I agree that so much of what can be unlocked from taxation has to do with relaxing the restrictions that are on cannabis right now. So whether it's 280E or just more enforcement on the black market to allow legal businesses to thrive. Those are really important fundamental standpoints that states have to get behind and enforce. And then for those states that are actually looking at legalization going from medical into recreational, I'm not the most popular person when I say it's okay to slow down. It's actually okay to do the right things up front because you have one shot. And if you get it wrong, the idea that we'll go back and pay into the communities that have been hurt, it's not going to happen. So I think it's actually okay for states or coalitions of states to take an approach to say, what is the equation? What do we want to get right? And how do we answer that with a long-term answer that makes sure that the capital returns to the people that should be paid, should be having access to that capital.
I guess we don't have all that much longer. We've spoken about the lack of institutional capital, and I'm jumping around a bit, but I want to cover also what is going on in the crowdfunding area. Israel, I guess, is a little bit different in crowdfunding. There have been 5 or 6 very successful crowdfunding campaigns here for cannabis. The US has been less so. How is that an opportunity for cannabis companies to seek funding where the VC model doesn't work? And here you can actually attract a wide audience of non-sophisticated investors. Dave, do you want to take a stab at it?
So I don't know, you know, and you're very accurate in saying that here in the U.S. it hasn't been all that popular. There have been some successes with crowdfunding. I personally tend to shy away from, you know, a company that is doing that. You know, I don't want the takeaway from today being that there's no dry powder available for companies that are in our industry. There's plenty of it. The takeaway should be that we are, as investors, and retail investors, I think, are speaking to that as well, but as value-add investors, investors that really, you know, spend, you know, all our time in the cannabis industry, we are hyper aware and hyper vigilant of operators and companies that are operating properly as a business. And, you know, to those that are struggling right now, we are aware of the struggles, and we are looking at the grit and at the ability to pivot for some of these operators. And so we're not always hyper focused on you know, how much money a company is making, you know, during these times of unrest, whether it's COVID or times we're experiencing right now. We look at a bigger picture, but again, you know, we're hyper focused on ensuring that companies are operating efficiently and operating properly as a business. And those companies are going to see investment. They're seeing investment today, and they're going to continue to see investment going forward. So to those that are seeking investment today, that's what I'd be focused on. And if you aren't sure, ask one of us, right? We're eager to help support and point entrepreneurs in the right direction. That's what we want to do. We're investing in this industry to ensure that the industry succeeds as well, right? So you know, again, reach out to us, reach out to many of the other investors, you know, that you see popping up on these webinars. A lot of us are doing them daily, and we're doing it for that reason. So take advantage of it.
I think it's a great point, David. I've seen, and I think Codie, you guys have all seen this, but companies are coming to us now and saying, hey, here's who we'd like to have as investor groups. Here's our data. Here's what we did in revenue. Here's what we believe our market share to be. Here's what our IP is. Here's what our assets are. Here's what our last rounds of financing have been. What do you say we do? Because ultimately, is it more important that a company in an A, B, or C round ultimately is successful and has an exit? Or is it more important that the A round was priced a little bit more, a little bit less, or a little bit more or less than a B round? It's more important that the company is successful. So, you know, we all know that. And I think it's encouraging to see founders starting to really work with smart investors and strategic investors, because we're not brokers. We're in these to the very end. But one comment also on the crowdfunding, you know, it's had some success and some failures. I'll comment on High Times, company we're involved with. You know, a lot of different thoughts out there with regards to High Times, but if anything, it did show the fact that a crowdfunding round can be successful. It did a Regulation A+, Reg A+ offering, and had over 25,000 people invest in it. So I think what that does tell you is that there is demand from the retail environment. I think as High Times gets ready to list in the public markets, I think it has over 30,000 investors on the cap table now. It is comforting for markets to know that cannabis companies have a real shareholder base, because that means volume, and volume is important for public companies. So if you can have volume, it's really important. Crowdfunding rounds can be a way to help bolster your shareholder base too, as you go into a public type of round. So I don't think they're all successful, Saul, but they have been. They certainly have been. Cannabis is an interesting topic to people. Certainly a crowdfunding round can have success when done correctly, but I'm encouraged. I'm encouraged to continue to see people find unique ways to finance their companies. But don't forget that there are equity investors that care. And you don't have to be ashamed to come to, you could email Codie or William or David or me and just say, hey, I have 5 questions. I'm trying to value my round. Here's what I'm sitting on right now. What do you say? I promise you, you'll get a response if it's that efficient. We really do want to help. So feel free to talk to investors with ways to finance your round. You don't have to come with everything solved. Sometimes we can solve that together.
100%. Just want to echo. Yeah, totally agree with Matt, especially if you're specific. The only caveat I'll say is you do get a lot of emails where they're like, I want to have an hour-long phone call with you. I don't know about the rest of the team. I try to do at least 2 or 3 of those a week, but it's really not even as valuable for them, I think, if they instead would just say, hey, 5 question on raising. Hey, here's my type of company. This is what I'm looking for. You know, who should I connect with? And maybe if you want to take it one step farther and you know, don't do LinkedIn DMs. I don't think any of us can keep up with all of those. Maybe you guys do a better job than I do. I simply can't. And if you're going to ask for something, I think it's always good to upfront try to show, you know, the person that you're asking for information from. Maybe try to provide a little bit of value up front. This isn't just for me, but for everybody else. If you want to get them to respond, and you'll get a lot more. You'll have a lot more success if you do those couple things. No DMs, no cold. Pretend you know something about the people that you're reaching out to, and try to have something specific and actionable and short, and you'll probably get a quick response. And that's how you start a conversation. Then down the road, we can continue to you know, help and get to know each other more. But up front, probably taking an hour phone call cold would be tough.
Yeah, I'd add to those 2 comments from Matt and Codie. Timing is everything. So don't come with a week to close a round and say you need a response and a check. Come at a time. There is no quiet time in cannabis ever. So as you're being advised, come with a succinct set of questions, but come at a time that there's not necessarily deal pressure. We love to get to know folks outside of deal environments. It's usually the best time to get to know companies. I'll tell you, we typically track companies for, you know, quarters, if not years, before making an investment. And building that relationship, you don't have any more valuable use of your time if you're looking for capital than building a relationship that starts at a point in time where there is no deal, where you get to know who your investor is and we get to know you. And Saul, to your point, you know, if you're coming with a specific topic, for example, we're talking about commodity and grows, and we're giving you feedback, consider that, and then come back with a pivot. You're entrepreneurs. That's what we love about being in this industry, is that we're the capital that gets to fund these ideas that then become real businesses and create jobs and create tax revenue and create hopefully well-being for a lot of different people. And so if you can pivot and take the information that we're giving you as a way of responding with something that's actionable in the future, that's fantastic. Those are great relationships to build over time.
And Saul, to your credit and to iCAN and CannaTech's credit, you know, we value the pivot that you guys are making into a virtual, you know, digital world for now, and continuing to be leaders in the space. And I know a lot of those participating today value that. And you know, we're here to support companies that, you know, like yourselves, that are you know, really, really focused on supporting the industry as a whole, right? And not just yourselves. And so you have a very important job and role that you guys are filling, and commend you for doing that. And nonstop, you guys have been putting on webinars, weekly. Highly encourage everybody to to tune in weekly. I do personally, and always learn something new.
Thank you. I appreciate it. So everyone can connect through our digital app, Hoover. I'll ask all the panelists to get on that, so you can ask them those 5 direct questions that Codie wants you to present with. Any last thoughts before we sign off? I want to thank you all for taking the time. I know, especially during these times, how important this is, and I really am thankful that you're all making the time to get connected with the people. From your perspective, you can't find deals without this, and entrepreneurs need this access. The learning and the education that can come from this has been very uplifting to me over this last period. So thank you again. Any last comments before we all sign off?
I do. So very, very simply, collaborate, work together. This is so big. It's going to continue to be big. We're all going to fight for this together. But if you do it as an individual or do it by yourself, that's not in the spirit of the plant. That's not in the spirit of the community we're trying to build. And that's not in the spirit of the people that got us here. So work together, and you can't lose. We're too strong together, please.
And Saul, I just add, we get very myopic sometimes on these panels. We're talking about COVID and crises, and we're all, by our nature, we're problem solvers. So we focus a lot of times on the problems. But I will go back to what we opened with. This is one of the most exciting times and best times to be investing in cannabis. What I said about 2020 as we were looking at it from 2019, I'm only going to double down. This is a great time to be putting money to work. The models may be different, the businesses may be different, the effects of where we're going may be different because of the surrounding circumstances. But as far as the long-term trends, I mean, we're just beginning in this industry. You look at the United States, it's still federally illegal. And you think about some of the easy falls, the SAFE Act, the States Act, or maybe there's a change in the electorate and we get a new administration and that has a different view on cannabis. The walls are going to be coming down, and the value that's going to be created is going to be tremendous. And then when you take that on a worldwide basis, you look at Europe and you look at markets that haven't even opened, this is a tremendous opportunity to be getting into cannabis. So don't let our myopic worries about what's happening today, yesterday, or tomorrow get in the way of the excitement about where this is going long term. There's no reason that the 4 of us are not doing something else. We are doing cannabis because we believe in it, and the opportunity is just starting.
And just again, the investors, our feet rather are not on the brake, right? We might be like when you approach a light that's about to turn yellow, so we're cautiously optimistic, right? But we're not on the brake. We're not pushing on the gas, right? But we're certainly not on the brake, and hope to hear from those entrepreneurs that are participating. Most likely, many of them have gotten a LinkedIn request from me over the past couple of months. I've been very active, so look forward to taking those questions and making those, having those conversations.
Codie?
And I'd be remiss if I didn't say 2 points also, Saul. So thanks for letting us wrap up here. My 2 points would be, one, to Will and, well, to everybody's point, if you look at the best years for private equity and VC vintages, they're always post-crisis. If you look at, as an entrepreneur, when some of the biggest companies were created, they're post, typically, crisis. And if you actually look at the stock market and your ability to invest during downturns and then continue to hold for the long term, you make all your money as the market comes down and you get to profit from the upturn. So we're not we're not at the part yet where the market is completely stabilizing. But if you aren't putting money to work right now, I think everybody's doing themselves a disservice. Obviously, you have to do it in a very strategic way. So that's point one. Point two is just a thank you, to all the entrepreneurs out there. We can't do our job if we don't have crazy people like you who go out and hammer your heads against the wall every day trying to build a startup. Let me tell you, it's way easier working inside of a company than doing what you do, and especially in cannabis. So, so keep crushing it out there. And all the feedback we give you, and sometimes my feedback can be kind of harsh, is because, I'm not here to help everybody's feelings. I'm here to help you succeed. And so that is our entire goal, is we don't make money unless you make money. And, thank you for going and grinding every day, because you allow all of us to do what we do as well.
Agreed, Codie.
Saul must have just been so amazed by our comments for closing that he is speechless.
He had terrible Wi-Fi, like all day, all month. Oh, he's calling me right now. He's calling me.
Carrie, that's not as good of a story. I like my version.
Yeah.
There he is.
God bless you all.
Oh, he's back. He's back.
I'm back. Internet in the age of COVID is a big challenge. Well, thank you everyone for joining us. I'll make sure that if any of the people
I wish I could read his mind.
Oh, no. Hey, God bless you guys.
Thank you, Saul. Thank you.
Thank you, everyone.
Hey guys, thank you.
Thank you.
Stay healthy.
I'm a good mind reader. I think so.